some things previously. So if you've done some work previously to get yourself prepared for the investing that you want to do, you set some money aside either with a 401k or a small business or just having savings of your own. If you've gone through that process, then you're going to be prepared to go where we're going. So that's going to be important, guys. That's going to be a part of what we're going to do, what we're going to talk about. I want to give everybody a chance to get here. I did just come on. This was not a scheduled live. I did want to take the opportunity to have this conversation about this because, as you know, here at BNV Finance Fixers, our focus is on making sure that we are becoming the people we need to be to sustain the growth we want to see. But it's more than just about, hey, what stocks should I invest in? What's the best way to invest in stocks? Whatever investment should I be making? It's more than that. It's really about those things that you do for yourself. Like it's the person that we need to be in order to be able to get the most out of it. And so what does this mean? So it means essentially, if I'm looking to make investments, I'm looking to make financial decisions and looking to make changes in my life, whether they're financial, behavioral, whether they have to do with my diet or they have to do with my diet, fitness, family, health, regardless of what it has to do with, it's about being able to say, hey, I'm taking the steps to get those things done correctly. I'm becoming the person I need to be in order to make it happen. So I guess that's Marky Mark. Thank you for being here, Marky Mark. Alex, good to see you as well. Am I too low? Is that better? Can you guys hear me better now? I hope you can hear me better. So, Isaac, Lisa, is my volume better now, guys? Let me know if you can hear me now. Let me know if there's still an issue with the volume. Yep, you can hear me. You guys are able to hear me. Awesome, guys. Thank you very much for your patience in this. So I got some notes here. Whenever you're doing anything, it's important for you to have notes, for you to make a plan. I'm going to share with you some of the notes that I've taken for directly the way my wife and I are doing it. And the reason this is important is because, give me one moment, because in doing this, I'm sorry for this. Isaac, yes, we can hear you. Felix, hello. Hello, Felix. How you doing, guys? Thank you very much for being here. Once again, we're going to get started on these purchases. As I said before, it's important to understand that whatever it is that you're doing, whatever type of work it is that you're doing, that you have a plan. And in having your plan, it's important to understand that you need to have it written out in a way that's going to allow for you to be able to hold yourself accountable. Accountability is really big. What makes accountability big, the primary thing that goes into accountability is going to be the simple understanding that in order for me to do anything, I have to set expectations. Where there are no expectation, there is no accountability. So I cannot tell myself or say to myself, hey, I expected more, I wanted to see more, or I am happy or unhappy with this result. I can't hold it accountable if I haven't set up the results to be something. A general live stream, you need about 50 subs. So I do not have a problem of answering questions if I have the answers right there. Yeah, Cal is right. Yeah, you need 50 subs. I'll be quick. I'll be completely honest with you. Fastest way to get 50 subs, a lot of people are probably not going to want to talk about it, but the fastest way to get 50 subs is remixes. Just remix, and really it's it doesn't really matter what your page is going to be about. Fastest way to get 50 subs is remixes. Fastest way to get from 50 to 500 is going live on a regular basis and actually having something to share, having a plan, knowing what you want to talk about, and then talking about it correctly. And so what do we have here? We says, Noah, do you think high yield income ETS are best in a Roth IRA? For example, STY, Isaac to me. Hey Kevin, hi. So, Noah, first, thank you for the question. I can tell, based on the question, that you are looking deeply into it, and that you are considering a lot of things in order to make your decisions. You're doing some research and you have some direct questions on it. And I'm going to let you know specifically, I don't do investing that way. The reason I don't do my investing that way is because the market has a tendency to work the way the market's going to work. And so, whatever category a stock falls into, the primary thing that I look for are things that are going to be consistent and pay out over a long term, because that's what we're looking for. So many of the factors that you're looking at when you're investing, when many people are investing in stocks, especially via IRAs, is with the expectation that at some point I'm going to deplete this. I'm going to deplete this account. I'm going to take the money out of this account, live off of it, or whatever the case may be. And so, give me just a second, guys. I have to address something. I was on earlier today. Dust Strider was on. It was on my walk and talk in the morning. We're discussing business right now. I generally do not block people, but I'm going to go ahead and get rid of Dusk. Bye, Dusk. Thank you. Go have fun on your channel. And so I normally do not block people, but I do want us to be able to have a true and real conversation here. I want us to be able to talk about the things that are relevant and that are going to get us where we want to be about our conversation. So again, going back to your original question about the high yield income ETS, that's a lot. I do not have a degree in investing. I do not have a background in investing. I spent some time looking into doing some day trading. The information that I have and the way I do my investments are for the long term. And it is based on my lifestyle and my belief that we should manage our life like a business. Managing our life like a business means that we should have plans, we should have outlook, we should have expectations, we should be able to follow those, and then we should invest in our life the same way we do in the business, as it's going to be ongoing. The biggest thing about a business being ongoing is that when your business is ongoing, that means that your business will outlive you. If your business is going to outlive you, which is what we would all hope to see, is that our business survives longer than we do. In order for that to be a good thing, just a moment, in order for us to be able to see that the way we want to and to make it happen, it has to be organized as a business, which means whatever stocks I buy, I'm not looking at what the return is going to be over the next 10 years, over the next 5 years, over the next 25 years, but over the lifetime, because we're going to continue to grow this stock portfolio and we're going to create a trust. One of the big things that's important for the information that I'm about to share with you is to understand that what we're doing here is building a legacy, right? We're building a legacy, and we're building a legacy to carry on for generations. So the investment that we make today is for tomorrow. And in doing so, we're moving as well. This is a big thing, guys, and I don't know if you've heard it before, but if you haven't heard it before, you're definitely hearing it here now. We're moving away from what is be a legacy, gang. You want to know what a legacy is? How you make money? This is, please hear me out. Not a problem. I'm going to cover that with you in just a moment. Yeah, we have to remove We have to, we have, in some cases, we just have to remove trolls. I understand that as well. So we're moving away from a credit system to a leverage system. This is important. Credit is something that you carry as an individual. Credit means this is how much we're willing to extend to you based on our belief of how much time you have left to work and how much of your time you will trade to pay us back. Right? No, we're talking about someone else. Please hear me out. There was a different guy who's already been removed. And so when we start talking about leverage versus credit, credit is based on how much of your time do you have left to exchange to get money from us. Whereas when we talk about, when we start talking about leverage, it's how much money do you have that we can get. We know you have it, so we'll give you a percentage of it, because even if you don't do the right thing with this money, it's already here, and we can just take that from you. And it's about building leverage. But the thing about leverage is when you learn to leverage correctly, you're capable of building your own wealth and then using other people's money to build even more wealth. And these are some of the things that I'm going to share. These principles are important because these principles drive the way that we are going to communicate and how the philosophy works, right? All right, so hello, how are you doing, Deuce? Top three favorite NFL teams. We're on stocks now, but thanks for asking. I only have one. Um, what do you think about investing in crypto and what does that say? Stacking them as they grow in value. Well, you always want to be able to invest and stack, but the biggest thing, like I said before, this is about leverage. This is about growth. Ultimately, everything that you do with money has to be turned into something physical, and real estate is the best way to turn it into something physical that you can grow. We're going to talk about it in just a moment. So, here's where I want to jump off, guys. So, one of the things that I believe is, if you're not familiar with them, in order to exchange or purchase securities on the stock exchange, you need a brokerage account. Robinhood is an example of a brokerage account. And so what Robinhood simply does is Robinhood just has an app, and you have access to this app, and this app allows for you to purchase portions of a stock. So used to be a point where the only way you could purchase stock is you had to purchase the full one. So if it was selling at $14 and 1.3849 cents or whatever the cost may have been, you would have needed that much money to get a full share of stock. The brokerages then went to a point of being able to change that to, just a moment. But we now have the ability now to purchase portions of shares. So having to purchase the full share of the security, you're now able to purchase just a portion of the share of the security. So this means that you can get into buying and selling stocks right on right on the mobile devices that we have in our hands. So not only are you buying and selling stocks, but you've created a brokerage account. You've set your money with a brokerage. This is step one, which used to be a lot more difficult to do. And not only was it difficult to do, but it was difficult to manage for you to speak to anyone. It used to be, in the past, you give your money to a broker, and then a broker is like, okay, it's in a brokerage account. We're going to invest it into this group of stocks that we believe are the best for your life. And so we'll talk to you again in a year, okay? We'll keep you updated. We'll send you paperwork. So, not at the moment. It's not a God conversation. At the moment, we are discussing finance. And God is a part of everything we do, Isaac, so we don't have to have the discussion about God or the faith. It's a presence in our life, right? So don't sell your Bitcoin. Use it as leverage. Definitely, Noah. That's what I'm trying to share. So when we keep all of these things in mind, we're understanding that what we want to do is build this leverage for us to be able to use to turn it into other ways of growing ourselves. Everything becomes exponential as we do that, right? So let's take a look at what that means. A brokerage account at around $2,500, a brokerage account starts to provide you with margins. Is anybody here familiar with margins? What margins are? Can anybody let me know if they know what a margin is or what a margins account is? Because there are a lot of different ways to make money. Margins accounts are going to be a great way to make money because this is the earliest form of leverage that you will encounter, and it's only about 2,500 bucks. Brother, get a filter. You is be coughing. Is my sound too loud? Is it spiking? I don't know what that means. So margins is to get into debt. No, that's not when margins. So what margins are, because you have to understand this is the difference between using leverage and using credit. When you use credit, you take money you don't have. You take your future earnings or your future earning potential and you say, let me use your money and I will give it back to you, and I'll give you additional money to go with it when I give it back to you. When you're using margins, it's different. When you're using margins, what you're doing is you're saying, I have this money that sits here. I have this money, I have this money that sits here. And because I have money with you, I want to use a portion of that money to invest further, right? So enough, you give them $2,000, they'll give you $2,000 to invest with it alongside it. So if you put $2,000 in the account, you have $4,000 to invest with. How does this help you? Well, if you invest, and I'm just going to give you like a short look at it. This is some really simple numbers, but kind of a straightforward understanding. If you have $2,000 of your own money and $2,000 of somebody else's money, and you turn around and you buy 4,000 shares of stock at $1 a share, right? That stock goes up to $2 a share. You can sell all of that stock, and now versus 4,000, you have $8,000 coming back to you. Well, because you purchased it at $4,000 a share, you only use $2,000 of your money. You use $2,000 of someone else's money. When you sell the stock, you're going to get your 2,000 plus the additional 2,000 that made. So that's going to have you come back now with $4,000. These are not the general returns. Returns are rarely at 100%. Hey, Rich, what's going on, man? So then what happens is then what happens is the $2,000 of someone else's money that you invested, you'll also get that $2,000 back. So you still have the $2,000 in your margins, but now you also have the $4,000 that you made. So you're sitting here holding $6,000 from a $2,000 investment. And that's the ability to use margins as leverage. Now, here's what happens. As your margins grow, as your account balance grow, your margins grow in correspondence. And so usually the margins are going to be about 1 to 1.5. So if you have, but you have to hit certain dollar amounts to get there. So if you get the $6,000, they're going to give you 1.5 times $6,000, or sometimes 2, sometimes 4 times, depending on the amount you have in there and the brokerage you use. There are some situations where people have invested $25,000 and the brokerage is giving them $100,000 to go with it. Or you invest $100,000, or you grow your securities account balance. The amount that's being held by the brokerage reaches 100,000. Like you're at $100,000 in value, we're going to increase your spending capacity. This is why this is compounding growth. So you want to really be able to see that. So, how you doing, Mike? So, when you're going through this process and you're doing your investments and you're looking to grow, that leverage is very important. This is why I say living off of leverage versus living off of credit is better. Most things that we do in life are over a time period. So we're looking to do something, I want to save money over 5 years, or I want to save money over 10 years, so that once I take this saved money, I can use it to buy something. That is what humans do. Humans save money. Businesses invest money. Businesses never save money. They allocate money. And this is how we need to have a change in our thought process as humans and what we do with our money. We need to stop trying to save money, and we need to learn to start investing money. And by investing money, we significantly change what we're doing with our future. Because if we're investing money, we'd have no intention of ever getting rid of that money. If we save money, we're saving it to do something. Oh, I'm saving money to buy my wife a ring. Um, I'm saving money to go on vacation. I'm saving money to get this outfit. So there's a difference between saving and investing. And when you save money, there is a point in which you're saying, I'm going to deplete these funds. I want to get rid of all of this money. When you invest money, the intention is to never get rid of it. You invest money for the purposes of growing it so that you can live off of the money that the money makes. So I want to try to check some of these comments here. Please says interest rates B is fake. Z said also, if you take loans against stock, banks will absolutely call in those loans, force you to sell during squeezes. That's why you have to run your life like a business. So that's the same thing as overextending yourself on credit. So if you get a credit card and the credit card gives you 3% cash back, any of the things that you normally purchase with cash, purchase with the credit card simply for the point of getting that cash back, right? And so if you're getting 3% cash back, which is going to be $3 on every $100 that you spend, and you're going to make $1,000 in purchases, that means that you're going to get yourself $30 back. If you're going to purchase something that costs $1,000 anyway, and you have the cash, make the purchase with the credit card, pay the credit card off before the interest hits, just for the purposes of getting the 3% back. You've already reduced the cost of just this thing from $970, from $1,000 to $970. These are very straight line formulas. We have to apply some common sense to the process. If you invest 2,000 and borrow 2,000, your net worth is zero. You don't borrow 2,000, you leverage 2,000. You invest 2,000 and then you bring on $2,000 of investment from other people. This is how people grow businesses. They get investors. So you essentially start your own business with $2,000. Your business's job is to purchase stocks, and then someone else says, I believe in your stock purchasing business. I'm going to invest $2,000 in it as well. As long as the stock doesn't go to zero, you're good because you have the assets. You gotta think about it, Z. I hear what you're saying, but we gotta put some thought into it. Loan loan is B debt. Yeah, that's why we don't do loans. We do leverage. Um, yeah, false is B growth. Ever heard of rich folks using ILETs, set up a trust, have it own the life insurance, pay premium via gifts, avoid estate tax? Yes, all of those are major benefits of trust. We're not there yet in this conversation, but yes, I've heard of all of that. Irrevocable life insurance trust. Yes. So yes, I understand what you're talking about there, but that's legacy building, and we've got to we have to learn that in order to build a legacy, because what you're talking about is exactly what I'm talking about. Is that Waller or Walker? Waller. It's exactly what I'm talking about. It's about building a legacy. In order to be able to build a legacy, you have to understand the actions you take today are for tomorrow. A life insurance is money that your family gets paid when you die, right? And so if you are investing in life insurance, and in some cases you can even borrow against it based on how much it's set up for, or you can leverage it or take money out of it. But the thing about it is, if you're paying into it and it's for your future, you're managing your life as a business. You've become a commodity or a product within your own business. Your life has value, and so when you die, that money goes back into the trust to help the future generations of your family to continue to build on this legacy that you're starting. And these life insurance policies can pay out into the trust. And even if your children choose not to do what you did or choose not to work in the business that you built, this trust will continue to provide for the children. I need $30. Okay. But they own 50% of your business. They do not own 50% of your business. And you can kick them out as soon as you want to, Z, because what happens is you leverage that $2,000. Now, first thing is, don't take all of the money that they put on or that they give you and use it. That's just a ridiculous strategy. Generally what you want to use is about 50% of what you have invested. So if they give you $2,000 to work with, Z, you want to take the 2,000, you're going to invest your 2,000. You invest about 1,000 of what they share with you, right? You don't invest the whole 2,000. I just use that as a scenario. You invest about 50% of it. So even if the stock price starts to drop, again, if it doesn't go to zero, you already have the 2,000 at risk. But smart investing, and can keep in mind, investing is for time. It's over time. Smart investing is going to allow for it to grow. Now, there is some cost to leveraging the money. It's not free, but if you're investing correctly over time, it'll continue to grow. First 2 or 3 years, depending on the price point that you start at and how your securities return, you may come out at a minor loss, a couple of $100 lost in terms of just the investment cost itself. But ultimately, in the long term, it's going to grow, and the leverage is going to be outweighed by the returns on your dividends. So I'm using money to buy a Lamborghini. It's a hypothetical. I use the Chase Capital investors, but in the meantime, my business succeeded, and so I'm glad to have 100%. That's a blessing to be able to have that, Z. So what I'm saying is, so I did this exact same thing on the E-Trade platform. And so my first thought was, man, I'm definitely going to go into doing, what do you call it? Day trading. Excuse me. That was my first thought, man. I'm going to do day trading. I'm going to get out here and I'm going to start putting the stocks out here, and I'm going to sell them, and I'm going to get them and I'm going to trade them, and I'm going to make 100,000. No, day trading wasn't my thing. So I got out of that before I got into a hole with it. But I continued to study about um, just about how to invest in general, how to purchase stocks, what stocks to purchase, and I came to understand um, day trading can be interesting. One of the things I found about day trading is that it's very exhilarating. It's like a competition. It's like you have to get in there, you have to play the game, you have to put time in. The key to day trading is, don't look to become a millionaire overnight. You want to see small wins on a consistent basis. So if you're working with a $5,000 account, you want to start to see yourself just winning every day. You just want to end up green every day. So it doesn't matter if you're green for $5, green for $25, green for $50. Whatever you're green for, you want to try to be green every day when you do day trading. And then don't try to create waves. I think that's one of the things that a lot of people try to do when they're day trading is, excuse me, they try to get out in front and like, oh, I know this is going to happen today, and so I want to get out there, boom, and I want to know exactly. I want to get everything done. We don't want to do that. Don't think that you're going to create the wave. There are billions and billions of dollars being traded every day. So we need to have an understanding that the money is going to come the way the way the market is, and we need to work to get the money, not to not to be the not to know the biggest next thing when it comes time for us to be able to do day trading. That's there now. My thing is I began to understand that investing is a long-term thing, so I needed to have a long-term strategy, right? And so that long-term strategy is simply understanding that I start investing at any price point, or I start investing in myself and move forward. Waller, who are the top financial people you follow? I first started reading about financial loopholes from Robert Kiyosaki. So the top financial groups that I follow, or the top financial people that I follow, at the moment, I don't follow any of them, because all all of the financial people that I've been looking at. So I do on YouTube. I follow Myron Golden. There's a young man called Wall Street Trapper. There's a few other people who are out there that I'll listen to and I'll talk to, but or I'll listen to and I'll watch. But what most of them doing are they're selling a group of stocks. I'm not. What I understand is we need to understand the mentality about how it works. Most brokerages, if you do the work, you're going to see 80% of investors, 80% of these companies, or these people who say they do stock investing, um, do not show a positive return at the end of the year, right? So we have to understand how the market works, understand it's for the long term. The, the market drives itself. It's about making good purchases, good decisions with our money. And the biggest thing is going to be to diversify. We have to understand it's not just going to be in stocks. It's not just going to be in real estate. It's not, we must diversify. But the simple thing that I'm talking about today is simply understanding how to learn to live on leverage. We need to find strong stocks. So I specifically searched myself for, and I use ChatGPT now versus going to a brokerage firm. The information is going to be non-biased. It's going to be based on true results. I did a simple search of the top 10 stocks over the last 10 years, stocks that have been trading for that time and stocks that have been trading for over 25 years. You can go ahead and have a seat. I'll be with you in just a second. So I'm going to be ending this in a moment because I do have a family meeting to get to. And I'll just let you know the top 10 stocks that showed up. And I did the research on how much it would cost to buy these 10 stocks, the top 10 stocks, to buy 10 shares of these top 10 stocks would be about 31,700. So let's say $32,000. And if we're using margins and we're going to spend 50% of our margins in order to purchase it, we would need to invest about 15,807. And though that's how we can get 10 shares of the top 20, and I'm sorry, that's 10 shares of the top 20 best returning stocks over the last decade, right? So that's why simple research like that lets us know if I invest, if I'm putting $20,000 into a brokerage account, I'm investing with margins, I'm only using 50% of my margins fund, I can grow my account that way simply and easily. I want to thank everyone for coming here and being here. I appreciate your time. I now have a meeting I need to get to. My family is going to always be the first priority within my life. I do appreciate you giving me the time to share with you. I look forward to speaking to you guys again. And as always, guys, if you want to know more, you can always stop by the channel. It was great having a chat with you guys. You too as well, Mike. You too, Kyle. Thank you for being here. Rich, as always, it's great to have you here. You can always like, subscribe, and share, guys. And until we talk again next time, remember, keep showing up, keep growing up, keep blowing up. God bless.